Welcome everyone to the LaunchVic webinar, Navigating US Investment Market. My name is Michelle Vu. I am Investment Manager at LaunchVic here. I do have the privilege to welcome you and be the moderator of today. Before we start, I would like to acknowledge the traditional owner and custodian of the land of which we are tuning in today. I would like to pay my respect to the elders past, present, and emerging. Welcome everyone. I hope you have a very good morning start. The panel that we have today for the US investment landscape webinar, we have Claire Bristol, Scott Domit, and Sandra Yuan. Welcome panel.
Thanks for having us.
Amazing. Hope you all have a very good morning so far. Just a little bit background about the panel. The three of the panel members here are the recipient of the LaunchVic Grant Internship, meaning they have a trip to US and spend some time to learn all the tips and tricks of the investment landscape. And that's why we're meeting here today, because I'm dying to know all the tips, all the observation, and what makes us different from US, and should we think about US as much as they don't think about us. Share all with us what you see. The format for today would be, I have a series of questions that I would like to ask the panel. I will try to not to take the whole session. I would like to leave about 10 minutes towards the end to give the mic back to the audience for Q&A. So if you have any question, feel free to pop in the chat, and I will try to address during the session as well. All right, we do have other LaunchVic members in the background, so if you have any issue, please let us know. But let's start. I'd like to start by hearing from yourself, panel, just so that for everyone in the room who hasn't had a chance to meet you yet, could you please introduce yourself and let us know when you did your internship in the US? Let's start with Claire.
Yeah, I'll kick off. Thanks so much, Michelle. So my name's Claire. I have been working for the last 2 years as an investment associate at Sklada, now as an associate at Encore. I did the program from May till August this year. So I think I was the first cab off the rank, closely followed by these two. But I did it at a fund called Upshot VC in Palo Alto.
Amazing. And Scott?
Hey everyone, I'm an investment associate at Ramp down in Melbourne. I did the trip got back about a month ago and spent 2 months with Soma Capital.
Amazing. And Sandra?
Hi, I'm an investment manager with Archangel. I spent 2 months with the Secure Ventures team across August and September. So got back maybe 2 months ago.
Amazing. I would love to hear about your highlight of your internship. And if you're feeling brave, share some of low light as well.
Yes. Are we going with me again? I think the highlight for me, and something that was really refreshing and exciting, was I felt that Australia wasn't too far behind in terms of the talent in the US. I think we have a bit of a halo effect and over the country in general and over BC in general. And that includes, the companies, the startups, but also the people working in venture as well. And I think I met a lot of people over there that gave me confidence that we were on the right track and that we were up to par or equal to the talent that was over there. And that made me feel really positive about just the people that we have working in the ecosystem over here, that we really could match the US. So that was a highlight for me. Low light, honestly, not just saying this because, we're on this call, I had the best 3 months. So I don't think that there was nothing really went wrong. Yeah, it was really hot in New York when I was there. That was probably like 40 degrees every day. That was probably my low light, but I had the best time.
What about you,
I'll go
Scott?
next before Scott jumps in, because maybe we'll have the same one. But Scott and I had the great privilege and pleasure to host an Aussies in New York drinks.
Mm.
And so we hosted that together, representing Archangel, Rampersad, and then also in conjunction with the America Australia Association, which is really great. I think support system and structure in New York. But essentially, we just brought together a bunch of young Australians who had made the jump over to New York in tech. And that was a really, I think, incredible community building exercise. But also, I think, very similar to what Claire said, it gave you a real sense of, I think, how incredible Australians are over there and how well regarded they are. Like, so many talented people were just finding their way and like doing really great things. So that was definitely a highlight for me.
Amazing.
But yeah, low, like I say, the same, the humidity on the subway was just something I've never seen before. Yes, that's
Nice
me.
degrees down there.
Yeah, I couldn't agree more, echoing the sentiments of Sandra and Claire. I think the coolest part of the entire experience was actually seeing the Australians that were over there thriving. So one of the interesting pieces of working with Soma compared to Ramsand was the scale of investing and money that they have at their disposal. Yeah. But ultimately, I guess the product or the people they're investing in, if you go down to it, weren't so they may have had different brands on their LinkedIn or on their resume, but ultimately didn't like sound different to Australian founders. They didn't have like a different vision for the world. It was just they were building in a different country. I think that filled me with a lot of confidence in Victorians and Australians' ability to beat them. Like I definitely walked away thinking that on average Australians are smarter than Americans. I'm willing to say it on record. I think
it's recorded.
Completely biased. It is recorded. Damn it. No, it's yeah, definitely something where I was like, I no longer fear that Australians can't compete with them. I definitely think on a global scale, we do have really top talent. I did really enjoy that American Australia Association, but generally, like there were a lot of opportunities Sandra and I had, and also just in general, where we brought together Australian founders and just getting them in a room, hearing that bubbling conversation about how they were going to tackle the US was definitely the highlight. Low light was just how much San Francisco's CBD sucked. Like the homelessness problem there was insane. So yes, they did need to fix that one. Otherwise, everything was pretty amazing.
I'm so glad to hear your experience. I'd like to go a little bit deeper on personal level. Has that internship shaped or changed the way you think of your career, or does it have any impact on your career as working in VC?
Yes. I think as a more junior investor, there is an attraction to the US because of the reasons that I spoke about earlier. You're told it's better, people are smarter, the companies are better, and all of those sorts of things. After going over there, that kind of effect was really wiped away from me, and I felt really passionately about coming back here and staying here. Because it was something that I wasn't sure of before the trip. And so I just think, on top of like touching on what Scott said as well, when you combine all of those things around lifestyle, but also the fact that, I do think we have so much potential, it probably quashed that fantasy for me a little bit. And I was really happy I had the best time, but happy to come back and start, thinking about what was next here.
I love that. You're not in your green. Yeah.
I think for me, it raised the level of ambition. I think because in the US, like it's a bigger market just on kind of density and volume of capital, but also really simply on population. Like they have like an order of magnitude more human beings than we do, which means that I think for every opportunity, there's more people chasing that. And so you've constantly got to be like better than you were yesterday, and definitely better than I think your colleagues, your competitors, whatever it is. And so I think the tenacity and the hunger was something that I thought was really quite incredible about the US. And that's something that, I'd love to see here, like in Australia, communities where, and you can already see it, like Annie Liao in Sydney is doing a great job with the Build Club of building like community so that everyone is encouraging each other to be better than they were yesterday. And that's something that, I think loved about the US, really respect about that ambition, and it only makes me want to be better and support like communities in wanting each individual to be, the best version of themselves.
That's really beautiful. Scott, do you agree?
Yes, I definitely agree with what Sandra said. I think I also had a similar view to what Claire said, in that going over there, I had this romanticized view of the US VCs having this like additional layer of intelligence. I mean, they do have the experience, they've done it all before, but actually meeting them and realizing that they were thinking the exact same way as Aussie VCs, they just had a different market that they were operating in, did make me become more bullish on Australia as an investor, because you have this saturated US market where there's heaps of people thinking in the space, and in Australia, still more of a nascent ecosystem. There's a lot more opportunity for you to actually think more about a deal rather than just racing into it because of the brand names or the names of the founders that are going into it. So I think for me, it made me think that being an investor in Australia is actually like a fantastic opportunity to kind of invest in a growing ecosystem, as opposed to just fighting to get onto cap tables as it was a bit more in the US.
That's interesting. So if we zoom out for the investment landscape, am I hearing that the investment landscape in US and Australia are quite similar, or do you think there's key differences between them?
I would say in terms of like process, and as Scott mentions, the way that they think about an investment is like broadly consistent. And so Zecure was also an international investor, so they invested across Europe and North America, and the process will be the same. So any founders on the call that have gone through an investment process, like the broad stages all feel very similar. The key difference I found in North America was just like the number of like competitors or like similar companies, which would mean that you have to be really loud and clear about what your point of differentiation is, because there really will be like not just one other person doing it, but it could be like 5 or 10, and that's just in your state. And so it means that like if you can stand out, you really are something special, but it is like just a bigger hurdle to stand out.
Wow. Yeah.
Yeah, definitely agree. I think ultimately the actual asset class is identical, and the difference is the scale of opportunities to invest and also capital to deploy, which leads to exactly as Sandra said, like if there's one competitor, everyone wants to make a bet in the space, so there are like thousands of funds, there's going to be heaps of funded competitors over there at the early stages, and so then it leads to a little bit more of a cutthroat environment as a startup, like trying to get out of, I think the stat out of Series A to Series B is like a 9% graduation rate. So it's definitely difficult, a little harder to get up there just because of the scale and complexity.
I agree. I think maybe we painted it too similarly in the start of this call. I think it's very different. I think what we do is the same, but the landscape over there is very, very different. We mentioned volume, but I found it impossible to map the market like in San Francisco, let alone like the whole entire country. So I think we have the luxury of, we all know each other. We almost know, all of the investors at our level in the country would have heard of most of the startups that have coming through. You don't have that level of coverage or knowledge over there. It's just impossible to, in my opinion. And so that is harder. It's just way harder to be across kind of what's going on outside maybe your little community or niche or wherever you're investing. So I do think it's really different, although the kind of processes are the same. And I think there's a question coming later on, like the different types of investment styles and things that they do that we just haven't reached yet either. So I think we do very traditional VC investing, which is the same as their traditional VC investing, but they do heaps more than we do.
Very interesting. So stay with that investment landscape. Have you seen any unique trend that we don't have in here, but you've seen in US?
Yeah, I'm happy to launch off from that because I kind of did lead us there. I think most Australian funds or investment looks like it's either equity or debt funding, very straightforward into a company at whatever stage.
Yeah.
I saw a lot of really interesting things that funds were doing. An example of one that I spoke to is they're fully established as a fund. They will only invest in a pro rata position that another fund isn't taking. So they have no contact with founders. They, the people from their team would never have probably done a screening call with a founder, or that's not how their model works. And so their entire relationship system is built on other investors. The fund that I worked for was very similar in that they had over 300 investments in SPVs off AngelList. So they would give money to really prominent angel investors or like micro funds and would just trust them to go and make the best investments. Almost took no founder calls themselves either. That's just like two examples I saw. There are hundreds of different ways of doing things that I just don't think we've graduated to yet.
That's so interesting. Okay. I mean, when the market is big enough, you can warrant that the pro rata portion is enough for a fund. I don't think we have reached that level yet. Very interesting. What are you and Scott and Sandra?
Yeah, I definitely agree that the nicheness, there was an ability to go super niche because there are enough opportunities. I'm sure Sandra's probably got more interesting insights there. For me, some of the things that VCs were investing in, like the types of companies were a little different. So that there were record companies that were still being invested out of VCs, restaurants, that kind of stuff. And the VCs were very much thinking about restaurants and chains in the same way that they were thinking about SaaS companies, which I found really interesting. For me, Soma Capital, where I was working, their entire investment style was invest early stage, pre-seed, seed, become really close friends with the founders, but then they leverage their investor base and their network within the ecosystem to push you into follow-on investors at your late seed Series A. And if you can graduate past that, they kind of leverage the fact that you've become friends in that early stage to invest in a growth round. So it's kind of a gapped investment style, which I think was really interesting. And it's kind of the pressure comes from, in order to get into growth rounds and good deals, you need to already be on the cap table in the US because they're so competitive. And so that's where that kind of strategy emerges.
Interesting.
Yeah, so I was at a specialized investment fund, so specifically construction tech in the built environment, which is what Scott was alluding to. And so they only looked at one thing in their world. But what was really intriguing was Australia is probably too small a market to really support like one big fund of like that was so specialized. But these guys were one of like at least 5 or 6 that they were good friends with who are also super specialized construction tech built environment only, let alone the number of like kind of strategics that also invest in the space, or like I guess like big family money from other geographies. And so once again, because of like the sheer magnitude of the US, you could have so many different like specialized niches. And maybe to Claire's point around mapping the market, having these niches was sometimes the only way that like a fund could even stand out in a capital raising process. And that was a big part of the thinking around why Zakua wanted to be like so specialized. It was like representative of their network and their career experiences, but also it meant that they could stand out as like early stage investors, because otherwise there is just a lot of noise in the market. So they could say, hey, we're really good at the construction tech space. LPs are supportive strategics in this space, yada, yada, yada. And so, yeah, not only was this like quite common in construction, you also saw it in health, or like there's also one that I'm sure like Scott and I are both familiar with in the restaurant tech space. Just because like we were saying, we have a restaurant tech investment together, but like random niches that you just wouldn't think of are able to be supported in such like a high volume, high density market like the US.
Amazing. I would like to just switch the angle a little bit before I throw back to the audience question. I would love to hear from founders' perspective. how do you know when someone, as a founder, want to go to US? How do you know that you're ready? And did you have any tip or advice on someone getting ready for US?
I have two thoughts on this, and they're at kind of extreme ends of the scale, and it's just kind of based on my experience. If I was a founder, I would go to the US at the very beginning. There is so much pre-seed money flying around. Like there's just so much money there in general, and there are so many people who just want to put money into things. I kind of came away with oh wow, not all money there is smart money for sure, that really gets sold on the opportunity, and they're very like, oh, I want to invest in tech. And at the early stage, I felt there's next to no diligence, and they're really buying into the opportunity, and you'll get a lot more money on better terms for a pre-seed deal. If you miss that window, as Scott was alluding to, of like the graduation rate over there, I would then wait until I had a really, really strong story to tell and like the metrics to back it. If I missed the pre-seed boat, to go later for growth. I think there's a window of opportunity early, and then if you miss that, the bar is set so high that I would stay here in Australia to like really build that and try and win the market here before I went there.
Great.
A fun thing that I saw a few Australian founders do, and I think it's pretty nifty, is before you actually like put boots on the ground in the US, to win over customers, like not even VCs, and we can talk about why you want to win the customers first, but to win over the customers, people would just lie about the fact that they're in the US. So like you just kind of turn the lights on behind you and you act like you're in the US. And then if it gets serious, like obviously, like if people want to meet you while you're actually in the US, then you book a trip. But before you like commit capital, commit time, you just tell people, I'm in the US. Like, what are they to know? We're all doing Zoom calls. But I thought that was a really fun way that some founders were testing the US market. Eventually, you will need to kind of put boots on the ground, because I still find that a lot of US culture is eventually like the handshake and the face-to-face, and very like, very, I think, like in-person oriented. And definitely for your investor meetings, I think the in-person piece will become more important. But often I think Australian businesses like will need some type of American credential, if you will, before they like really fully raise American money. And so yeah, winning the customers in nifty little ways like that could be kind of interesting.
That's very clever. I love that.
Yeah, I really like Sandra's phrasing of American credential there. Like, if you're an Australian building in Australia, raising from and your target market is the US, which would be kind of like the only reason you're raising from a US VC. In order to convince them of the narrative that what you've built in Australia will translate over to the US, they want to see some evidence of like that go-to-market motion, that product actually selling over in North America. And the reason for that is, like, while Australians are used to the story of Australians building something here and moving over to the US, in the US, they're not thinking about Australia that much. Like, they're not reflecting on the Australian market. They're not thinking about the similarities that much with, like, the size of a mid-sized state over there. So it's really for them to build conviction that you've actually built something that's solving a problem for your US market, which is ultimately what they're going to be investing in. They prefer to see actual revenue or traction over there. And some of the US VCs are harsher than others. So if you have one customer in the US, some VCs might start to see that as traction. A lot of the time, the bigger funds tended to see it as, if they weren't already investing in Australia, they discount the Australian revenue to close to zero until you have that US revenue that proves that it is actually a problem over there. Wow. So
that's very interesting. So I would like to add some question from audience, and we don't need to go the whole panel. I'm going to put you all on hot seats. Claire, I've got a question here from Elda. Are Australian safe cap justified compared to the US? And when should Australian VC back local setup using US level caps? Do you have any insight on that?
What was the start of it? US caps?
Yes. Are Australian safe caps justified compared to the US?
That's very hard to answer. I think I don't know if supply and demand is like a odd analogy to use, but essentially I think that's what it comes down to. Like over there, it's kind of the Wild West. Anything goes, particularly at the early stages. Like I was saying, there were like pre-seed companies raising on 15 to 20 mil safe caps with no traction. And you just won't get that here. There's not the volume, there's not the competition. People aren't going to pay for it, but they pay for it over there because, you know, that's just kind of the way it is. Is it justified? I don't know. I think it's just completely different environments. I think it's justified for, I'm obviously going to take an investor position on this. I think it's justified for Australians to price them the way that they do because the inherent risk involved compared to over there, and we've already spoken about scale and things like that, but I think it makes sense for our market size. And I don't know that comparing them, and we would have founders come back and say, I've been offered this by a US investor, and it's like, that's great. We just can't do that. And you will never be able to in like current times at least.
Yeah. Next question is around, I'm going to jump to the Camilo question. It's around the deep tech landscape. So we had touched on the overall, but what about the deep tech? Is there any similarity, any different, any support? What do you see? Scott, do you want to answer that?
Yeah, for sure. I actually, interestingly, did meet quite a few deep tech investors over there. And I think Australia as a whole has a really rich university ecosystem that's producing really innovative tech. And like we're having a massive push to commercialize that at the moment, which is fantastic. I think the US VCs that I spoke to just didn't realize that we had this system. And I think that there was no view of them why they wouldn't invest in Australian deep tech, but they were more looking at obviously the internal, the US stuff, and also Europe. I think the key to that bridge is like connecting the deep tech investors here with the deep tech investors over there and making them more just generally aware of what we're producing, particularly as deep tech often requires a lot more capital. So yeah, I think like unsurprisingly, as has been kind of the answer in a few of these cases, we're just a more nascent ecosystem. We can see the path forward. As we push out that path, it will become more known on a global stage. So, yeah, I think it's just something that will develop over the next couple of years.
Great, thank you for that. Sandra, I've got this question here. Is around the instrument. So, were you seeing a lot more price equity versus safe versus coin node? What is it compared to us?
Yeah, so I was investing mainly at the seed stage over there, and I'd say it was probably more price equity rounds. But I think Scott would tell you in Australia that's reasonably consistent too. Like at the seed stage, you're probably more likely to see priced over a safe. But generally, in terms of these companies graduating from their pre-seeds, funnily enough, wasn't actually seeing a lot of like pre-seed safes converting in at the seed stage. So I'm not sure if that means that they were raising their pre-seeds on price rounds. Like I had such a I had such a narrow view of the world just because I was only looking at one sort of company type. Maybe Scott might know a bit more because I know he did a bit more pre-seed in the US.
What do you think, Scott?
Yeah, again, I think it varied fund to fund. So most definitely had some interesting safes. I think safes just like as the earlier you go, the more it makes sense to use a safe note, particularly investing in pre-seed companies. So they had one really interesting safe note, which was an uncapped mega early stage that they would write, which was basically literally part of their thesis of getting onto a cap table early, supporting a great founder. We're going uncapped safe because we just want to support you, and whatever your next round is, that'll be the valuation that we come in at. I think it did very fun to fund.
Yeah, interestingly, I've started to see a few uncapped safe happening quite a bit in Australia as well. Yeah, very interesting. So Jay has a question here for the whole panel. Do you guys consider it to be an advantage for Australian startup to scale to Australia first, with few competitors, build revenue and validate before hitting the US with full steam? which is similar to what Claire was saying.
I think everyone on this call has already made the point that Australians are really well regarded over in the US as founders. The reason that I found that they were really well regarded was around the resilience and the tenacity of Australian founders, because I think there is a lot of respect that there isn't a lot of money floating around in the US ecosystem. So when you do get funded, you're getting like less money compared to your peers in the US. And so if you're able to hit similar revenue milestones, you are simply put more capital efficient. And so US investors do have a lot of respect for that. They similarly do say that also about Canadian founders. But I will say the flip side of that is, as you're thinking about going into the US for your seed or your Series A, you really do need to think about having, like, as we mentioned before, American credentials. And that is most commonly shown via American sales. So yes, I personally think there is something really incredible about building in this ecosystem where you're like just forced to be scrappy. But the flip side of that is, if you do eventually want to go over to the US, then you have to think about like translating everything you've built and like kind of the mindset of go to market into a brand new market and country.
Interesting. Do you agree, Scott?
Yeah, 100%. I mean, if you're building in Australia, if you're an Australian building in Australia, you've got the network, you've probably been raised here, you've got the support, you're able to build something with perhaps a little bit less competition. That's good in your kind of spawning pool phase where you're growing as a company. But if your target, again, like your target audience could be anywhere in the world, but if your target audience is the US, ultimately at some point you're going to have to hit it and hit it hard and go over that. So that will lead to you needing to take the playbook you've built here, translate it over to the US. And yeah, you can't just build in Australia forever. And you have to get those first few customers in order to actually unlock US capital. I guess where there is an additional advantage is the Aussie VC ecosystem is there to plug that gap. If you're ultimately trying to raise in the US, we know that if you built something here, and you're a great founder, if you get enough capital, you can move over to the US. Well, you then get the introductions, the support, the early customers. You want to set yourself up, like how Ramsden thinks about it. If we invest at your seed stage, you're moving over to the US, and then you're getting enough capital so that you can build up enough revenue in the US to prove out a big US Series A. Like that's kind of the way of thinking about it, and you're getting supported by your Aussie VCs on that journey.
Very much. Love that. Christina has a question about the support. Can you recommend elementary education-specific investment funds in the US? So perhaps to expand on that, what you see in terms of support, or you find any good resource that you could share with us?
I think Austrade has the landing pad program, which I think was just generally the best program I saw for founders that wanted to get over there. One, get introduced to the Australians, and also just get a lay of the land of the US ecosystem. So that was, I think it definitely was an application, but it seemed like if you're a good founder heading over there, you can definitely get onto that one. It was awesome. And Austrade and the other agencies over there, like LaunchVic, we met, the AAA that Sandra mentioned. Any Aussie agency over there is worth reaching out to see how they can support you.
Yeah, you said InvestVic, but all of the states have their arm of that. So it's like the trade and innovation arm. Every state government has one of those ties to the US. So it would just be about finding the one relevant to wherever you are.
Great. Sandra, any tip?
No. I think these guys have answered it beautifully.
I think we have time for one last question. Audience, you want to, okay. Give me 1 second. All right. If I don't get any other question from the audience, I will throw in my question. I'll give you 30 seconds to do this. All right. Oh, excellent. Give me one sec. Cool. My question is, do you ever think there's an opportunity where the startup don't have to go to US? Is any vertical or any case where your advice do not go to US?
Yeah, 100%. And I was going to say that earlier when we were talking about should you build in Australia and then go to the US first, because it's so context is dependent. And I think there are examples of businesses or industries that don't translate well or are completely different. And so if you go over there with a fully built business, it's not going to matter because it just is completely different over there. I'm going to use this as a really broad generalization, but let's say healthcare, for example, it is a different ballgame. They have a completely different model. What works in Australia would be very, very hard to make work in the US just because of the way that the health systems work. So I think you need to be strategic about where you go. Education is a similar one. Like there are places that make a lot more sense for people to go than the US. The UK is one of them, and then tapping into Europe, which have much more similarities with how we function. I think anything that's like heavily regulated, education, because the curriculum and things are similar, even if you sell to like government agencies or things that are very specific to councils, like you need to find an environment that translates. Otherwise it's going to be very, very painful to try and take it over there. So yeah, I think there are plenty of examples. I think that we need to be careful of just thinking that the States is the next place to go, because often that's not the case. That climate could even be with, what's happened over there with the election results and sort of people coming into power who aren't supportive of any investment into climate. That's probably a big consideration for people building in that space. That's probably not somewhere that you're going to get a lot of regulatory tailwinds and probably have a lot of headwinds. So you might go somewhere else that's much more progressive on that front.
Interesting. Very interesting. Anything else to add, Scott and Sandra?
Yeah, I'd say 100%. On top of just like which sector you're in and whether the US market even makes sense to move into, could be what is the size of the outcome you're chasing. Like global domination isn't necessarily required for everything. If you look at Grab in Southeast Asia, just like an Uber clone that's done really well, never left there, that's fine. Yeah. And they had a good outcome. You have heaps of examples of great Australian companies like Madpause, Airtasker, that are all just listed here. Their market is here. That's completely fine. That's a great company. So it depends where you want to go, which investors you partner with, 100%.
Amazing. Good. All right. I think we're at time. That's all we have for today. Thank you, panel, so much for sharing your insight and coming today. Thank you, everyone, for tuning in.
Thank you. And thank you to LaunchVic.
Thanks, LaunchVic.
Bye.
Cool.
Good day.